Hi, I'm Steve Spencer from SMB Capital. Today we're going to spend some time reviewing a macro long oil trade idea that started to play out back in April. And so this is a little bit different than normally the things that I talk about. Normally we're reviewing either intraday trades or multi-day trades. This is a much longer time idea, but that doesn't mean that we can't use short-term technical analysis and short-term price action to kind of help us control the risk on this idea. But generally when I'm talking about things, catalysts that are moving stocks day to day or maybe for a couple of weeks even. And every once in a while something comes across my desk where I come up with an idea based on some bigger picture things that can lead to a much larger trade. So for those of you out there, whether you're intraday or multi-day traders, or even longer time horizon, these are some things that I think could be helpful for you. So the thesis behind this idea was the drop in oil over the last few years from $140 a barrel all the way down to the 20s caused an enormous drop in investment globally in the number of oil projects that were being done. So here's one headline right here. Projects canceled in the last few years are going to lead to 27 billion fewer barrels of oil being pulled out of the ground. And you can see that since 2015, $170 billion in CapEx spending was cut. And that's going to have a huge impact. And we know commodities really are a function of supply and demand. And globally speaking, there's still a ton of demand for oil, and that's going to be the case for a long time, for many years to come, probably for decades. And so as the demand for oil continues to move higher, if we're not investing in new projects globally, we get these imbalances. And that's going to cause the price of oil to move up. And so that's basically the thesis behind this idea. Back in April, when I first kind of shared what I was doing, I tweeted in early April, I'm going to get involved in this through USO when it was back around $9 a share, tweeted that out. And for the next few months, it moved higher as oil started to move from the high 30s up to that 51, 52 area. And then what we did was we tweeted out again when oil got back up to that 51, 52 area in early June, kind of got out of the trade. And the next part of our job really was to look for a pullback and get involved. And so I created this video back in July, late July, and I said, hey, here's an update. And the chart we're looking at right now kind of gives us the update to where I first gave it a shot on the long side and a pullback. And one of the things you want to do, after it topped out at 51, 52, I started looking at it at 47, 46 in that area, looking for a spot to get long again. And created the video, talked about the May support holding. And what happened after I created that video, I don't know if it was a few days later or the next week, we took out that support, got stopped out below 10.5, and it took a couple more tries before oil actually bottomed. And if we look at this next chart, I kind of drilled down, and this is the futures contract, not USO, and I highlighted 1, 2, and 3 different spots. The first spot was where I bought and created the video, and you can see that red line got taken out, stopped out. The next spot that I gave it a shot was the support from a little bit earlier in that uptrend, probably mid-April, and that also got stopped out. And then the third time was the charm, right below $40 a barrel, had been really good support after oil had actually put in its long-term bottom. And so what I tweeted out in August 2nd and 3rd was, hey, oil's coming into this 40 area. I'm long. Let's take a look at it. The next day it was at 40 again. So basically, giving everyone a heads up. And even before then, when it was in the low 40s, I kind of developed a thesis. Somebody had talked about the fact that oil was getting killed in Twitter. And I said, hey, look, if you're looking for free fall, what that would look like would be a flush below $40 a share and then a close back above 42. So at that point, I was kind of myself visualizing what that would look like. I want to see it go down below 40 and then I want to see it get back above and close above 42. Perhaps that's what a short-term bottom would look like. That tweet that I did was in late July, and a few days later, when it got down to the 40 area, I just gave a heads up on Twitter to everybody to take a look at it. And you can see it retested again the second day. And then eventually, we did get that close above 42. You can see by this chart here, a few days later, it looks pretty good. And now here we are a week and a half, 2 weeks later, and we're back up at much higher prices. This is the view on USO, where we are around $11.30 in a share. And so you can see pretty clearly on the chart here, it bottomed at in the 9s. It made the higher low around 975. Now we are back around 1130. I wanted to just drill down a little for those of you who are the shorter term traders. If you weren't looking at this from like a macro standpoint, where you want it to be involved in the low 40s for a move back up to 55, 60, a more conservative way, a more short-term trader could trade it is say, okay, it's trending down, it's trending down, it's trending down. It kind of stops here below $40 a barrel. What is a more conservative way for me to get involved? You can see those two bottom blue lines. I'm kind of showing you an area where it puts in a bottom, it gets back above that second blue line from the bottom, it starts to hold, and then it trends higher for a couple of days. And if you're looking for confirmation of a real reversal, what you saw was it stalled out there at $10.20, 3 days in a row, and had a hard down move the next day down to the 1070s. The next day, very quickly, it got back above that 1020, consolidated, held, and then moved up again. That's your confirmation for the reversal. And since that point, it's gone up more than $1. And so if you're the more conservative person, you're looking for real price action confirmation after it puts in the low, that's it. Very clear resistance at a prior area where it kind of had some trouble, and then it quickly gets above that, moves sideways for a little bit, and moves higher. You get long there with a stop below $10 a share, perhaps you catch the bigger move. And that's a little drill down there. So hopefully there was something for everyone there. Longer swing traders, position traders. This trade ultimately, if you're long it now, what you're looking for over the coming months is a move above the June highs, and then eventually looking at the longer term futures in oil, I think that 58 and a half, kind of that's a spot where you would be taking off some risk, and then ultimately you would see if it could get above $60. But certainly, looking for it to bottom out in the mid 40s didn't work a couple of times, which is fine. The risk reward from 45 up to 60 was still really good. The risk reward obviously from 40 to 60 is even better, 50% potential return. And I think that probably plays out in the coming months. In the way that it's moved off of the bottom, originally I was thinking by the end of the year, but it's moved so quickly back up to $48 a barrel that it seems like this might actually play out, who knows, maybe by October or November even. So hopefully this was helpful. That's our update on the oil macro trade idea.
Hey guys, it's Merritt here with SMB. One thing we've done is listen to you and what you need. And what we've heard is that you need some help putting it all together. Trading is tough. There's a lot of moving parts. And while general courses and books, they can be very great and you can get nuggets here and there and really learn a lot, nothing replaces customized mentoring with specific feedback tailored to exactly what you're doing. And I mean, look, I've been there. I've been the retail trader at home, spinning my wheels, trying to figure it out. I had a lot of weaknesses I had to work through. And that's one of the things, if you work with me, I teach from those weaknesses, right? I've been there, I've overcome a lot of things, and I can recognize that in you and help out. And here's the general format of what I do. First thing we want to do is really get to know you. We want to work together and draft a rock solid trading plan. And what does that mean exactly? Well, we want to help you build your playbook, right? What setups you're executing and how good of a job you've done in building that playbook. Find holes in your trading plan. For example, one thing I see a lot with people is they say, well, this was an uptrend, But okay, how do you define that uptrend exactly, right? So I will help you quantify that and really plug holes in that trading plan. Another thing you'll have is a professional looking over your shoulder. Not just this idea of getting better as a trader. I see too many people that just try and sit down and trade and think that they're gonna keep trading and eventually it's just gonna click. Work with a professional, set very specific goals, right? I'm gonna help you take a look at exactly where you are now by getting to know you, find out where you wanna be, and then come up with specific steps that we can achieve working together to get you there. And real feedback on real trade decisions that you make throughout the day, throughout the week. I'll be able to comment on those trades and offer some insight. I could talk about all kinds of benefits for the next hour if you want. Your mindset, technical analysis, risk management, getting bigger, order flow, volume profiling tools that I use, market profile, framing a higher time frame context, preparation, review, the list goes on and on and on. But this is the structure we create here at SMB on our desk here in New York to take struggling traders to consistently profitable ones. Now you can have access to the same resources that we use here.